afternoon and thanks for joining us. Holly Shields here for 𝐊𝐴𝐴 TV, welcoming you all to another edition of Executive Corner Expert Talks, the show where we bring to you industry leaders, successful business owners and market experts all under one roof to help you discover the latest economic insights. Today we're joined by Mr. Quinn Perrett, co-CEO at Traction FinTech, the company that provides financial and regulatory technology services specializing in regulatory trade and transaction reporting across Europe and the Asia Pacific region. Welcome to the show, Quinn. It's a pleasure to have you with us.
Hi, thanks for having me.
It's excellent to have you on the show today. Now, you've established Traction in 2017 right here in Australia, and then you've later expanded to the European markets. Fast forward to now, and you're currently servicing over 80 financial firms. So how has this journey been for you?
Yeah, well, it's definitely been an interesting journey, as every business is. I think in Australia, it was relatively simple. We were a little bit ahead of the game with the new regulations that were coming out, and my business partner, Sophie, and I had some really deep connections into the OTC derivative industry already. So that was quite easy. We got set up, everything sort of fell into place. But moving overseas and starting our branch the following year, 2016 in the UK, was a whole new ball game. Basically, we went over there, we were the new kids in town, there were some established players. It took a long time to really build up our network, get people to know us. And another thing we found about expanding into another country is Britain seems so similar to Australian culture, but on a business level, the subtle differences actually make a big difference. So negotiating a deal or performing sales in the UK, at least for me, was considerably harder and seemed quite alien in the end. But thankfully now we have some great staff on the ground in the UK.
That's really interesting, and who would have thought those subtle differences obviously make all the difference in the business world. Have you at all been impacted by COVID? I know that it's actually been rather a positive turn for the tech industry. We've seen a lot of innovation there. Have you been able to jump on the bandwagon and ride the wave a bit with that?
Yeah, so COVID, I think, has probably been kinder to us than it has to some industries, because we're a tech player, everything is in the cloud. We don't rely on having a storefront or receiving any deliveries. So very, very easy on that front. Also, our clients generally have benefited from the volatility in the market. Having said that, it's been challenging for everyone. We have offices in 4 countries around the world. It always seems to be one of them is coming into lockdown, the other one's coming out. So managing the staff and the different environments that they're going through has been quite challenging, but quite interesting. But I think we've navigated through it quite well.
I can imagine so, and that's really good to hear. Now, touching on your clients just then, how do you simplify their reporting process to improve their trade reporting process?
Yeah, so firstly, we do everything with code. We take what can be a manual process for a firm that wouldn't be using a company like ours, and we code it. So we start by getting to know the client, we get to know their financial products. We map everything through from what they have natively in their back office or trading systems to what they have to report to a trade repository under the regulation. Once that's all mapped out, it's coded. Then on a daily basis, we automatically extract their raw data in their own raw native format, convert that into the regulated format and report that to a trade repository, and then confirm that back to the client. So it is all automated, and that the client doesn't have to do anything, which unless it's in exceptional circumstances.
So it sounds like a fairly smooth process for them overall.
Yeah, look, financial firms have enough to worry about in regulation, financial markets, all the other things going on. We trade reporting simplified is our slogan, and we really try and live by that.
Well, that's great to hear. Now let's talk digital for a minute. Are cryptocurrency contracts for difference reportable under EMIR and MiFIR?
Yeah, so yes and no is the answer. So firstly, we need to consider are cryptocurrencies even currencies, and are they financial products? So firstly, with currencies, they don't have an ISO currency code like all the other currencies are. So they can't be reported as a currency, but they can be reported as a commodity. So generally, the general consensus is you could view them as a commodity like gold. So the next thing is, are they a financial product? Again, that's not quite clear cut, but they have been regulated before as a financial product by the European regulator ESMA. So they've put restrictions on them before. They only have the power to put restrictions on financial products. So that pretty much says the regulator sees them as a financial product and as commodity. So yes, they can be reported under EMIR and should be. There is a little bit of clarification waiting on all the individual European regulators, like the German BaFin and FCA in the UK. They'll all do things slightly differently, especially since Brexit. But generally, EMIR, yes, with MiFID and MiFIR reporting, these cryptocurrencies aren't traded on normal exchanges in Europe or recognised trading venues. So generally, no, under MiFIR.
Right. Now, is that regulation something that's constantly evolving?
Yeah, so with the regulation itself is kind of slow and written into law and accepted by Parliament, but there are so many financial products and they can also spring up post-regulation. So one of the problems with the inconsistencies and uncertainties with crypto is it's very new, and a lot of the regulation that was written couldn't envision a non-bank distributed ledger currency that was sort of invented peer-to-peer. So whilst the regulation applies, the people who drafted that regulation couldn't envision anything like this. So the way regulations applied evolves. The regulators often come out with Q&As or clarifications, but the sort of core fundamental regulations are usually several years apart, often 5 or 6 years apart, but they do evolve in their interpretation and their application.
Well, that's certainly interesting, especially seeing that legislation keep up as technology is obviously evolving, and particularly with such a new financial product like the cryptocurrencies, that's something that's still ongoing, I imagine. Now, being at the forefront of the developments in financial and regulatory tech, what are some of the recent developments in the market on your radar?
So, very specific to our industry, one of the main players, Univista, part of the London Stock Exchange Group, has pulled out of securities financing trade repositories. They're closing down their trade repository in January, which would leave only one company called DTCC, one trade repository in the UK. So that's quite an interesting development. More in general, we've seen Brexit and the way that that's affected financial regulation. So with us, and I think most people in the financial industry, we had been hoping for what they call a deal Brexit. So there was a worst case scenario where Boris Johnson couldn't negotiate a deal and what they called a no-deal Brexit, and the UK would just fall out with absolutely no relationship with the European Union for trade. Well, that's essentially what we got in the financial markets. So everything was split in two. So we have clients in Europe, we have clients in the UK. We had to split them into two trade repositories. Branches that were operating in the UK have sort of had to set up separate companies. So often you'd have one financial entity across all of Europe and the UK, and now they're having to have two separate licenses. So that was something that sort of everyone breathed a sigh of relief when the deal was done last minute on Brexit, but it turns out, that deal was great for covering Prosecco being shipped back to the UK or butter from British cows going to France, but didn't really help regulatory or financial services. Another very interesting one that's come in the media a lot lately is payment for order flow. And we're seeing a lot of regulators around the world talking about banning this. So we have some major companies like Robinhood, which have a no commission model, where essentially they're getting paid by the way they send their orders out. And I think this is an interesting movement with, we saw the same thing in big tech, where you get things like your Gmail or your YouTube for free. There's a saying, if you're getting the product for free, you're the product. I think perhaps that's the same case as the trader is the product, and they're being sold on stream to these algorithmic trading firms. So I think we'll see a lot of shake up in the industry, both in Australia and in the US, around payment for order flow and the brokers that operate on that model.
Absolutely, a lot of interesting developments there, and it's interesting to see the ripple down effect, obviously, that it has on businesses like yours.
Thanks.
All right. Now, at the moment, we know that Traction has offices in London, Sydney, Cyprus, and Singapore. Are there any expansion plans on the horizon for you?
Yeah, so Canada and South Africa are on our radar. A lot of our regulation comes from G20, the 20 richest nations who sort of get together and cooperate on a lot of matters, including financial ones. So Canada and South Africa have similar regulations to Australia or Europe in regards to derivatives reporting. So we have clients in those countries and looking at broadening our offering and base there.
Well, that's great to hear. Hopefully the broadening comes soon enough, and we look forward to seeing you having more clients on your book. On that note, we're just about out of time at the moment, but I've got to say thanks a lot for joining us today, Quinn. It's been great to hear your insights.
Thank you. It was a pleasure.
Pleasure to have you on. And viewers, if you've just joined us, we just had a very stellar discussion with Mr. Quinn Perrott of Traction FinTech. You can catch this edition of Executive Corner Expert Talks on the 𝐊𝐚𝐥𝐤𝐢𝐧𝐞 channel later today. But for now, thanks for your time, and stay tuned to 𝐊𝐚𝐥𝐤𝐢𝐧𝐞 TV for more live market updates.